So, hi Shashank, thank you for doing this for us. We live in a very volatile and uncertain world. What do you think? What is happening with the global macros? Because we recently saw Trump administration punishing countries who are buying Russian oil. So, what is your take on that?
So see, it all stems back to the real problem that many people are not looking at, which is the US debt. And I think almost a big chunk of it is maturing in 2026 that they have to pay back. Now, the only 2-3 options they have is either you sell oil, which they have abundance in. They can print money as much as they want, but that leads to asset price inflation, and inflation is bad for their country as well. And they hate inflation. That is the two problems that they currently have. And third thing is obviously they have so much defense, so might as well use it somewhere or the other. And that is why you see a systematic attack on Venezuela. They got all the oil reserves. But the problem is they have a lot of oil reserves, but nobody was using it because Russia was funneling it to us and we used to refine it and sell it to European nations and other places, right? Now, by putting sanctions here, they actually forced us to buy it from US, which is sitting in huge supply. In fact, they're now reducing the rate of oil to sell it at a much lower rate as well. Now, all this becomes a huge advantage for them because they make revenue from these oil sales, and tariff already they're making, I think almost $600 to $700 billion they've made already in that. And all this goes into refinancing their existing deficit that they have. So if you actually think about it, it was all US's old karmas and sins basically catching up right now. And that is why these aggressive moves are being played in the market.
That's very nicely put up. What do you think about Indian markets, like Indian macros? Because this is, you talked about global, but why is India getting affected so much? Is it something, some regulation related to India, which is creating a problem for us?
See, there are 2-3 things we need to look at from India perspective, right? We were doing really well in 2024, first half, right? Then we had the taxation changes coming for the stock markets. At the same time, we saw Trump coming into power and attacking India with tariffs, not just India, but the whole world. Now, when that happens, the first people who exit any uncertain economy are the FIIs, right? And we saw that if you see 2025, US dollar also lost around 8%, but India lost around 4.5% in the rupee terms, right? Now, when FIIs leave a country which is constantly attacked by Trump, they will go and invest in other markets. And that is why we see that most of the money went into South Korea and went into European markets. And that is why European markets did really well. And I think the best performing was Greece at that point, right? Euro did really well, 17% up to the dollar. Now, all this happened and India, the currency also kept going down. FIS kept leaving because the currency was going down, and it created a big scenario. At the same time, we had our elections. Most of the money was not going into productive assets giving growth to GDP, but it was going into non-productive assets. Now the government has finally realized that, and now the changes have slowly started coming in. We saw the GST rate cuts happening. We saw the income tax rate cuts happening, but nothing fueled the economy yet, right? So one thing that is still pending is that in India, we have to see the reduction in capital market taxes. I think in the budget that is coming out next month, we have to see some kind of reduction because we increased STD last time. We increased LTCG, we increased STCG. Everything was increased. Now, for a foreign investor, it is absolutely not favorable. Even for an Indian investor, it is not favorable. That is why you see market participation also went down and everything went down at the same time. Now, with home loans at an all-time low, interest rates at an all-time low, private companies are now stepping up and have to step up to start putting huge amount of manufacturing and capex. But again, that is happening in pockets because the government tenders in the last 1 year was slowed. The government spending was slowed as well because of elections. So now if the government capex kicks in, private capex kicks in, then finally our earnings, which is going to come now, will look attractive. And then the whole market will start going up, and then your FIs will start coming back. The whole cycle will get reversed. Right now, we screwed up the cycle last year. So now we're reversing it one step at a time.
Perfect. You like to connect the dots really well. So if you have to connect the dots with global macros and Indian macros, and talk to us about what do you think, what is your view on Indian markets in the near to mid-term?
2026?
Yes.
So I think we're still not out of the bad news era. I still feel that 2026 in the first half at least won't be great. I'll tell you why. Because now the earnings season will come. Now we all know this earnings result that comes will be a spike with respect to the GST rate cuts that happened last quarter, right? So obviously everything will look good, but then immediately the next quarter after that, you will see, even if the growth is good, you will see it on a quarter-on-quarter basis that it is not great because the base this quarter is very high. Second, we have to complete the US trade deal because having 50% tariff definitely affects everyone. Third, our rupee is falling constantly. That has to be corrected as well. Now, all of these things I mentioned won't happen in the next 1-2 months. It is going to take some time. Then we have to start seeing FIIs coming back into the markets. If FIIs come back, then the dollar, INR dollar becomes stronger for us. They'll get us dollars inside the country. We are now getting a lot of FDI back into the country, and all of this assuming that China doesn't create more issues to India. And if we see that US and India are becoming very close, China will try to interfere in some way or the other by putting some restrictions on India. So all in all, I don't think we are looking at very attractive rates for the next 6 months. I think it will be volatile. Plus, we have more news coming from Iran. War might be on the horizon. Greenland, there is things going on. China, Taiwan, there is things going on. There's very high chances all of that would play out this year. At least 2 wars might play out this year. And if I look at that, I don't think 2026 will be a splendid year. We might end up being flat or maybe, few percentage up, hopefully up. But doesn't seem like a crazy year, at least for the first 6 months.
Yeah, that's pretty scary actually in the near term.
Yeah.
Let's address the elephant in the room today. What do you think? Where should investors position themselves in terms of market capitalization, and also a few sectors which you think with this strange thing, what is happening in the world, how would you position yourself?
See, first things first, sadly, a lot of investors in that 2023-24 boom era just loaded up on small caps, mainly small caps, not even mid caps. And they got punished a lot in 2025, including even I had a lot of small caps. So we all got punished a lot. But problem is nobody churned their portfolio and moved into large cap when things are changing. Now, if FIIs come back to India, the first chunk of their major portion will go into large caps. Because today, if you look at the large cap index, it is undervalued compared to the historical average. Whereas small cap is not undervalued even today compared to their historical average. There is still some level of froth being left inside that. Mid caps are okay, right? So if I see the FIs coming back, the first level of growth will come into the large caps, then mid caps, and then small caps. So small cap cycle has still some time to go. So if it was me, I would position myself in a lot of large caps today, keep even more mid caps, and then keep very less small cap allocation. We can keep gold because gold, I believe in 2026 will continue to do well, at least to 4,700 to 4,900 levels. Dollars should reach at that point.
Perfect. And what are the companies or sectors that your RIA sectors?
So look, I would like to play sectors that are not correlated to this entire problem across the world. What is not correlated in that, right? One is if you look at banking and financials in India today, not correlated. You look at telecom, not correlated, right? Nothing will happen to the telecom sector. You look at healthcare, hospitals, again, not related to the correlation of abroad. The minute you have imports, you have exports, you need raw materials, you are going to get affected, right? But banking and financials, I believe right now with, let's say, NBFCs, certain PSUs are doing much better than private. And there's a big systematic change that has come into this picture. In fact, you are tracking the entire banking space at our company, right? What are you seeing in this entire NBFC or banking space?
So, Shrag, what we have observed is that near that ILFS crisis in 2018, the GNPAs and NNPAs for all banks and PSUs went up very high. So, interesting data, almost 10-12% was the GNPAs for these banks and PSUs.
This is the non-performing.
Yes, that is the non-performing assets. So it went pretty high. But what has changed structurally since then is that our credit quality has now improved for all PSU banks, for all banks. So that is one thing that we are seeing an improving credit quality. And because of the shift in RBI governor, now we have Sanjay Malhotra, who is more towards growth oriented. So he has induced a lot of liquidity in the markets.
Right.
So because of that, your credit growth has also picked up. We saw a PSU bank, SBI, saying that they want to grow their loan book by 12-13%. That's really good. And we see a lot of private banks or public banks who are there's a company called DCB Bank. So in the last 10 years, they are saying they are at the highest ever ROE, highest ever profit margins right now. So these are a few structural changes that are happening in the banking space. We are especially bullish on the gold finance, as you rightly said about gold, because we see a change in pattern where China had more debentures, US debentures. Now, once they have to refinance it, they'll probably move towards real assets like gold, silver. So gold prices is in a structural bull run. Unless it corrects a lot, there I don't see a problem in gold finance. Also, there were two key reasons. One is your gold prices going up, because of which you can disburse, your gold finance companies can disburse more loan, because when your gold prices goes up, they have a LTV, that is loan to value ratio. So earlier what used to happen, Shashank, was the bank had capped it at, RBI had capped it at 75%. But now if you go and take a loan from a NBFC or a bank, now below 2.5 lakh rupees, if you take gold loan, they have increased that limit to 85%. So that means now you can give more loans. Also, gold prices are also going up. So if you had pledged your gold at 100 rupees, now it is at 200 rupees. So you can get extra loan from banks. So if banks can disburse more loan, it will create, your loan book will grow by good margin. So you recently saw CSB Bank, they had reported around 40-45% gold loan disbursement. We also track a company called FedFina. So it's a federal bank's subsidiary company who is more into gold loans and your other loans, mortgage backed loans. Almost 45% of their book is gold loan oriented. And they also want to grow their gold loan business by 20-25%. Overall, the gold loan industry is set to grow by 15% as per PricewaterhouseCoopers data I was seeing. So overall, FedFina is trading at half the valuation of Muthoot.
Wow.
Speaking on Muthoot, why we like Muthoot and why we also hold it in our basket, Fluid C, is because Muthoot is a market leader. And if gold does well, Muthoot will also do well. It also commands a premium versus FedFina, is because 90% of their loan book is gold oriented, versus FedFina is 45%. But FedFina also wants to increase that gold loan size, and it will become more than 50% for them. Trading at half the valuation. And if you see, there was a podcast by Digant Haria sir. He tracks gold finance and banking really well. So he said that FedFina has second largest best efficiency in gold disbursement. So Muthoot disburses around 20-22 CR per branch, and FedFina disburses around 12 CR versus a company like IIFL or Mannapuram who disburses lower. So if in a single branch you are disbursing 12 CR, that tells you about the efficiency. It's like same store sales growth, how we track in retail. So very bullish on NBFCs. We also hold Cholamandalam. So you see commercial vehicles and heavy vehicles doing well. That is the reason we see Cholamandalam and Shriram Finance, who are more oriented towards CV and heavy tickets, heavy trucks, doing really well.
So that is why your Smallcaps basket now, the way we have churned it, is 30-35% financials mainly, right? This is the main reason.
Yes. Even if you see a momentum basket, Fluid Q, that is also more skewed towards financials, because now we see relative strength also playing out in the financial basket.
But do you think this will sustain for another 3 to 6 months?
Yes, obviously, because now let me tell you about valuation, a very key understanding. In 2022, PSU Bank Index was trading around 0.7 time price to book. In the peak cycle in 2010, PSU Bank Index was trading at 2.5 time price to book.
It's like a cycle.
It's a cycle. And now if you see, the PSU Bank Index is trading around 1.4. So you see PSU banks doing well, right? Because of the re-rating. 0.7 times price to book has become 1.4 times price to book. So you get valuation re-rating, as well as now you see these companies want to grow also. So I'm not saying that it will reach to 2.5 or not. Probably it can, because 10 year down the line, before SBI Bank was completely different how it is now. There is an asset cleanup happening. The companies have become really well. At that time, if you just entered a SBI office, it was all dossiers. Now it's completely digital. So now the quality of banks has also increased. So PSU banks are really good. In fact, Nifty Bank Index also, it is the median P is around 2, price to book ratio is around 2.6. Right now it is trading at 2.2. In the last 3-4 years, banks has not made money. But now we see, because if a country has to grow, banking sector has to grow. And as you rightly said, if FI has to come down and invest in India, and probably large caps, they are buying Indian banks. You see a lot of deals, RBL Bank, Emirates NBD acquiring RBL Bank, Shriram Finance deal happened, IDFC First Bank deal happened. So, Shri, a lot of deals are also coming into the banking space, whereas you see FI is exiting India,
Yeah.
but in banking space they are acquiring. So they must be seeing something in Indian banking space, right?
So that is nice. That is nice.
Also, I would like to ask you one thing. Banking is one. You also track healthcare companies. What do you think in hospitals? What looks interesting to you?
See, one reason I like healthcare / hospitals is one, they're very defensive.
Yeah.
Okay. When they're defensive, my drawdown on the portfolio means it won't fall too much. Number one. Number two, right now we're at the lowest rate cycle that is there. Like the interest rates are very low. So usually what happens is hospitals during a low interest rate cycle will take a good amount of debt and build the next set of hospitals. Now hospitals usually take 2 to 3 years for payback, break even, and then not break even, but they take payback to 2 to 3 years, and then they become a good free cash flow machine. They move from a new hospital to a matured hospital, right? Now is a time where not many people are looking at hospitals, but many people are going and taking loan and building aggressively for the next cycle that will happen. That means 3 years down the line, today I'm getting it at attractive rates. There are some hospitals that are not attractive. Their EV EBITDAs have gone up the roof. But if you go slightly lower down the value chain, you will see a lot of good promoter run companies, good management taking up aggressive capex, trying to grow their business along with the free cash flows that they currently have. In fact, even if you look at the leader, which one of the leaders, let's say Apollo, they have 50% of the revenue coming from hospitals, but they have the remaining 50% coming from the pharmacy and other business. And now they're saying they want to hive off that 50%, which is a high cash flow generating, high ROE, high ROC, defensible moat business. I think only Entero comes very close to them with respect to the competition. So this coming out is also going to be a very big advantage for us. So healthcare I'm tracking right now because nobody's looking at it, but next 2 to 3 years, you will suddenly see huge amount of money coming and flowing into the healthcare space.
Okay, that was really insightful, Shashank. In 2026, if you had to make a portfolio now, how would you position yourself?
See, definitely large cap heavy, 60% no brainer on that. Okay. Again, 60% large cap heavy, go for the big names. Don't think that if I invest in Reliance, I will not make money. Aisa nahi hota hai. Go for the big names with 60% large cap. I would still keep 20 to 25% mid cap. I would keep less than 10% or 10% allocation in small cap because that cycle is going to take time. We can always change our portfolio to this cycle and we have to always be adaptive that way. And I would keep at least 10%, if not 15 in gold for the next 1 year. So I would keep 60% large cap, 10% gold, taking it up to 70. I would take 20% mid cap, taking it up to 90, and then 10% in small cap, and that's it. Right? And I don't need to keep cash here because large caps and gold, which is 70% of my portfolio, will protect me for the falls. So every time it falls, I take whatever SIP I have and put it back into this top 70% and balance the portfolio that way. That way I will not see terrible falls. Even if there's 2 wars that take place or anything happens, my drawdown won't be that high in the portfolio.
That's perfect. I guess that sums it up, Shashank. Thanks a lot for doing this, doing it for our viewers. And guys, if you like this segment, do definitely comment down below. If you like this segment, we'll do it more often with Shashank, obviously if his time allows. And also, if you have any questions, do let us know in the comments. We'll be definitely more than happy to reply to you guys.
Awesome. Thank you guys.
Thank you guys.